Hi guys, Harry Yotis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. So, picture of the S&P 500. Big news of the day, look at this. Friday, April 24th, the last Friday of April? Yes, I think. We'll see. Last Friday of April, close at the highs. That's the big story of the day. New highs. And you know what they say about new highs? Never short them. Okay, we'll get to the new high story very, very quickly. First, we'll talk about the technical picture. Guys, bullish. Okay, I was hoping we'd pull back a bit. A lot of calls were being bought here, but then if you look here, maybe they got rid of them after this down day on Tuesday or Wednesday. I think that's Tuesday, this big down day. I don't know, because all I see is this market is very, very strong and still within the high tight flag pattern. Okay, I was hoping we go down, retest these highs. I guess not. We'll see. One day you have to correct. Okay, we're getting a little bit, I don't know, maybe extended, maybe not, who knows, but you have to respect the strength of this market. This market is super strong. Okay, don't listen to anybody else. This market is very, very strong. Okay, so technically speaking, bullish. We saw the sentiment, we always go with it. Still at greed, 66. Route 66, not exactly 666, the sign of the devil, but I'll take Route 66. Extreme greed, the momentum. Everything else, yeah, other things, they're like strength. The sub indices are not there. Even the put call ratio is at fear still. Maybe not a lot of calls are being bought. Who knows? Okay, we'll see. But I have a feeling that the put call ratio is basically in a middle zone if you just look at it today or yesterday's close or whatever. Not the 5-day average. This is a 5-day average, okay? So even market volatility, okay, VIX, 18, still that's fairly high. It's slightly, 20 is elevated, so it's really close to here. We're not at these levels here where we were for months in 2025. The market just kept going up. For months we were between, everything was under 20 for like months. Okay, so here, yeah, we're still pretty high. At this point, at 18, 19, it's still pretty good, pretty profitable. The odds are in your favor to sell premium if you want to do to sell premium in terms of options. If you want, you can still buy a little bit, but I wouldn't at this stage. I prefer to do that when they're down here. But generally speaking, you should still be selling premium when it comes to options. So you have the VIX fairly, not elevated, but high enough to show that it's still pretty high, and it could come lower, which means we can even go higher. It supports the bullish thesis. We can drift much lower and stay there for a while. So it supports the very, very bullish narrative. And we saw yesterday the AAII, bulls are just starting to come in. For a long time, they were below average. This is the first week of above average, and the bears are not even below average. They're still above average in the bears. Maybe you can say that they're neutral, okay? But this is just 1 week, okay? If something bad happens next week, this market tanks, I guarantee you these guys it'll reverse. You'll see bears back up in the 40s and these guys back down, because this is like the bulls just tipping their toes in the bullish while they're not 100% sure yet. Once something bad happens, boom, we're down, okay? So we have the technical picture bullish. Still, the sentiment is still pretty good. We're just starting to get into the bullishness, okay? The greed has been here for just maybe 4 days, 4 or 5, maybe a week, okay? So we still have nascent bullishness, I would call it, okay? So let's go to the big news of the day. We finished at new highs, okay? New highs. Let's look at the weekly chart. We haven't done that like in a while. Boom. Last week finished that. Look, you can just see it more clearly in the weekly chart. Very, very bullish. We're not even overbought, not even close. So this high tight flag in the daily doesn't really show in the weekly. Do you want to be a classical chartist? You need like 3 weeks of high tight flags. So a couple more weeks around here would be great. Even a down move would be even beautiful. Okay, but the weekly close on new highs is very, very bullish. Okay, again, any pullback should be bought, in my opinion. Okay, unless you get crazy war news like World War III starting. Okay, but until that's the only thing that would stop this bull market, I think, because this is going much higher, in my opinion. Remember, we said when it broke the new highs, we can get to the 750 level. Fairly easy. A 5 to 10% move after breaking to new highs is fairly standard. And a 5% move from 700-ish, let's say, is 735. and at 10 is 770. So 750 would be right in the middle. Let's say a 7% move. It's very, very here. 750 on the 735 is right here. We're in shooting distance. Okay, 735 is right here. Very, very, that would be a 5% move. We could get there before, retesting the highs here. That would be a nice drop before going up to 730, 735 before making a down move. Perfect. That would be nice. Okay. So we're at new highs, but yet again, what does CNBC say? 20,000 job cuts at Meta, Microsoft raise concerns, AI driven, all bad news. I'm just telling you that this is bad news. It's trying to create doubt, trying to show you the bad news when we already know that the labor market is okay. It's not a lot. Maybe it's 20,000 job cuts at Meta is not going to change the initial claims or whatever, or the unemployment rate by a lot. Okay, but they're trying to blow it up here. It's still negative news, it's further supports our bullishness and our bullish thesis. Okay, so guys, stick around. Now is the time when I tell you exactly what we did, what I think going forward. Well, I'm bullish. I expect even a down move here would be nice, but an up move and then a down move would be great too. Whatever happens, doesn't really matter. You should stay long regardless. Okay, so let's go over the trades that we made yesterday and a new trade that I made today. Okay, just see what my view going forward. So let's see what I did in terms of, that's a strategy, but let's see my tactics. Okay, tactically, we entered a trade in Tesla. Okay, do you remember? I'll mark it off for you guys. We sold the 325 put, and we sold the 465 call. Okay, we wanted to collect premium. This is an undefined risk because you're open to the downside. You're short if it goes above here. You're long if it goes above here. But look at the difference in prices. Okay, getting down to 325. This is a 1 standard deviation move. Okay, meaning that this is 16 delta. This is 16 delta. Look how much farther the call 16 delta is compared to the put. Okay, it's literally 376. We need 25 plus 65. That's like a $90 on the up move to get 1 standard deviation, but only 50 on the down move. So 2 to 1. The skew is 2 to 1 to the call side. Okay, the people are really buying a lot of calls. They're expecting the move to go up. They expect the move is up. Okay, but as long as it churns around here, we're good. It's going to burn premium, even go up here, burn. And we're going to realize a profit here. We're going to manage it early, of course, but just to show you that the skew here is to the upside for Tesla, and so far our spread is doing well. The other trade that and before we go on, I'd like to mention a comment from a viewer yesterday stated that would they use Robinhood and they can't really do these kind of trades because Robinhood won't allow them to go naked, I guess, short call and naked short put. I'm sure they would allow you to do a naked short put if it's cash secured, okay, if you have enough cash in your account, but maybe not the call portion, okay? So how do we handle that? Well, I'm going to mention this along with the update of our next trade, okay? So how do we handle the fact that you can't enter short call positions in Robinhood? Or if you have a smaller account, this might be a little bit too prohibitive of a trade for you. What do you do? Okay, so let's go to our second trade. We'll mention that in Intel, okay? Intel, what do? When it was trading here, we shorted a put, 55 put, around here, and we shorted the 88 call, okay? Earnings, it was an earnings move. We did this on May. So as you can see here, the 55 put was much closer than the call. Again, this is 1 standard deviation away. So literally, it was like from 64 to 88. That's 20 points, 24 points. And here it's just, 10. So again, 2 to 1 ratio of skew, meaning that the people were expecting an up move, and exactly what happened. But as it didn't exactly hit it. Okay, but now it's starting to test my call. So what do you do when this happens? Okay, let's go to the option screen to explain it more clearly. Intel. Okay, I did the May 39. We shorted the 88 call. Shorted the 55 put, Okay, it's down to 40 cents. Okay, this is what I did. Okay, what you do in this case, when you have a position like this, you have to roll it. You roll a call, the untested side, the put has to be rolled higher. Okay, that's a classic move. Everybody does it. It's not something strange or unique. Okay, so the 88 is being tested because we're closing at 82. So what I did is I didn't roll it. I just covered it. Okay, I covered it at 40 cents. So I have no more put position. Okay, so this position is gone, and I'm looking for it to be sold. I'm going to look to sell a higher put, bringing my strikes closer. Okay, so maybe you can visually see it on the chart. Here, what I did was I got rid of my put. Okay. And what you're supposed to do is move it higher, maybe sell the 70. Okay. Do this. Okay, because then you rolling it, you buy it back and you sell another one and you collect another premium on top of the premium you collected here. Okay. But I didn't do that just yet because I'm not 100% sure this will go up, because this looked to me like, as I was looking at the action for the day, that it would be burning itself out here without getting closer to the 88. Okay, so I decided to just take off the put and not sell it again. Okay, it's a risk. You don't have to do this. Technically speaking, you should have just sold the 70, collected a premium, whatever. It's one of the things you could have done, or you could have rolled this forward and down. Many strategies. But what I did was, personally, I got rid of the put and I'm just waiting. I'm just holding the call. I'm going to manage this on its own. And if it holds around here, I might just sell another put. Okay, I might just sell, not just yet. That's my strategy. I'm just waiting for that to happen. Okay, so what do you do when you have a strategy like this and you have a short account, a small account, or Robinhood doesn't let you do it? Okay, what you do is, for example, get rid of this put. Okay, let's get rid of this put, and let's assume we wanted, the price is at 82 and we wanted to sell the 88 and sell the 73. Okay, let's say you can't do that, or the 75. Okay, let's say Robinhood doesn't allow you to do that. So all you do is you just add some wings. We call it an iron condor. Okay, so maybe you want to buy the 70 and sell the 90 and buy the 95. This will make a defined risk. Okay, if you do this strategy, you added the wings to the condor, and therefore your max loss to the upside is just the distance between these, between your short and your long. So here would be $5, and here it would be 7. Okay, because they don't have the it's 88 to 75. It's a little bit weird. We could have done the 85 to make it more symmetrical, but you get the gist. You want to add wings, what we call. So now it's a defined risk. Your broker will definitely let you do that, and you can collect a premium between 415 and 3. Let's say 333. Okay, somewhere in the midpoint. You can collect a premium, because if you didn't do the wings, if you didn't buy those wings, your premium would be like $9. Okay, so that's it. It's just risk reward. It doesn't really matter. Like, it's perfectly priced. If you want to put the wings on, you're going to get less of a premium, but less risk. You're not going to have these catastrophic losses with the stock could really tank or really go up on very, very good news. Okay, so that's it. It's a risk reward. So you just add the wings if you can't do that. Okay, and finally, what I'd like to say today is that I added oil. I added an oil short around here. I don't know if it's going to get up to then 100. I decided to go a little bit early. And what I did the USO, because you can't short US oil. So what I did is I shorted the 190 call. Naked short the 190 call in June. So a couple more months. I hope this bleeds out. I don't think the war gets elevated. The risk level doesn't get elevated. So I'm taking a chance here. I'll manage it if it ever gets up there and something bad happens. Okay, because if you can see, we mentioned the skew before. This 190 it's like 3 or 4 times the equivalent of the put. Okay, so we talked about the skew. This is 3 or 4 times more expensive than the equivalent put. So this is why you want to short. The market is telling you, please, we need people to short. Too many people want to buy. Too many people want to buy oil. So we're going to make it super, super expensive and worthwhile for anybody who wants to take the other side. Well, I'm going to take the other side and I'm going to take this call, okay? Because it's very difficult to get filled otherwise. So I decided to, heed the market's call, come inside and sell some premium so that so this skew between a call and a put, diminishes. So it's a 1-for-1 because now the calls are way more expensive than the puts by a factor of 3 or 4, okay, which is astronomical. So I'm taking shorts. Okay, that's it. So that's it, guys. We went over our trades on Tesla. We're just keeping Tesla how it is. Tesla, it's still within our range. We're keeping it as it is. Intel Corp, we covered the put and we're still holding the call. Okay, they covered the short put for a profit and we're holding the short call. We entered a new U.S. oil trade via USO by shorting the 190 call. And SPY, guys, never short new highs. Okay, I don't know. This looks very, very strong. We can go much higher before going lower. I think I'm going to lose money on my little short positions, but we're going to make it on the longs. So that's it, guys. Looking forward to next week and the last week of the month. Right? Later.